What's going on, family? How are you? How are you? How are you? Let me know in the chat if I'm coming in loud and clear. Let me know in the chat if I'm coming in loud and clear. Let me know where you're tuning in from, city, state, country, wherever. Thank you all so much for being here. We'll start at, give it like a 2 minute buffer or so. I think I've reminded people heads up enough that we start at 7 p.m. Eastern Standard Time. 7 p.m. Eastern Standard Time. I understand this is your Sunday. You're relaxing with you and your family. You're getting out. Maybe you've been sitting at home all day. I'm not sure, but let me know something good down below. Let me know something good down below. Brooklyn in the house. Never been to New York. It's like, bro, you are wildin'. I have never been to New York. Never been to New York. So got to get up. Got to get up there. Really have no desire to be honest with you. This is wild. Got a lot of folks, a lot of friends. I don't know. I guess the pandemic was something where I was like, okay, but I'll get up there eventually. Orlando, Florida. Beautiful. Make sure this screen doesn't start acting up here. Make sure we are good. So if you can hear me, let me double check screen one last time to make sure we don't have any problems. Playa del Carmen for the summer. Yeah, we need to get back down there. Playa del Carmen for the summer. Double check. There's Megan, straight out of North Carolina. Straight out of North Carolina. Y'all can probably hear me. Just getting the screen all up and good. That's why we give a little bit of a buffer. We'll get started here in a couple minutes. It's always tech. You got to just make sure. Because I think one of the lives, it was like, dang, my whole face went off. My whole face went off for a second. All right, all right. Cool. I'll let a few more people roll in. I can see the numbers rolling in. Hear you well, though. Can't see your video now. You should be able to see it now. Should be able to see it now. Should be able to see it now. Let me know down below really quick. It's kind of flashing a little bit. Kind of flashing a little bit. Okay. Well, y'all know that you're more than welcome to see my shining face here. My black don't crack face. I keep getting mistaken. Like I know some of y'all are well seasoned from myself, but I don't know what it is. But I get like mid-20s a lot of times, and I'm like, Brian, you're still young. You're still young. I'm like, yeah, I know I'm still young, but like I grew up in an era where it might seem like I have an old soul. I'll be 36 this year, so approaching that big 4-0, and every year I'm blessed to have at this point. Things are trying to stay active as much as possible because I'm not gonna lie, like, hey, I'm still healthy, but shoot, some stuff lately been hurting. So, anyways, y'all just get to know me a little bit more. Yes, you are good. Flashing in all. Thanks. Okay, video is good. Thank you so much. If it is flashing, I do apologize. I'm checking on things, so I am not sure. 36 years young. Exactly. 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 Maybe a little bit of the cord, but all good. Let's jump into it, everybody. We got our 10-minute buffer here. I do want to respect folks that are rewatching. So if you're rewatching, you're more welcome to skip ahead to this point. I typically give a 10-minute buffer, so I don't like to waste your time, my time. So it's precious. So let's jump into it. Welcome into the Stock Sermon Sunday, everybody. Hopefully, you're doing absolutely wonderful on this beautiful Sunday, wherever you are in the world. Just shout out a couple people from Dallas. I grew up. Not, God dang it. My latter adulthood years were in Dallas. I moved from Dallas to Las Vegas recently, past year. So I was in Dallas for about 8 years. So near and dear to my heart, where I built a lot of relationships and my business majorly in Dallas. Before that, I was in St. Louis, Missouri, in pharmacy school for 4 years. And then prior to that, I was in Atlanta, Georgia for undergrad at Morehouse College. And I am born and raised in Birmingham, Alabama. So if you don't hear an accent anymore, if you just ever wondered, my backstory, that is when people say, "Oh, where are you from?" Blah blah blah. And I'm like, "Oh, we moved from Dallas." Like, "Oh yeah, I'm from Texas." I'm like, "I'm born and raised in the South." Okay, but I've been out for a minute, so I guess I've been professionalized, as you can call it. So today we're going to talk about these traps, how you should invest into the markets as the market is falling. So please be mindful. I'll be sharing my screen in just a second. So I do apologize if this is your first time on this video. This is not normal. If you do see some flashing, I'm not sure what's going on, but we're just going to keep it rolling here. And I'm going to go ahead into my share screen, so we can jump into it. All right. All righty. Let's go here. And I've got the chat up. All right, let's jump into it. Let me give you a summary of what's been going on. And the first thing is this Trump war, or excuse me, trade war that's been going on as of recently. A lot of tariff news, a lot of inflationary data that's been coming out, a lot of jobs data, how the unemployment rate has been doing, the unemployment data has been doing. I've been seeing some social media posts around the mortgage rates coming down. And I've got some serious commentary. I've just been letting it kind of mull over. And I know a lot of folks have been wanting me to create more content on this on the short form side. So I will get back to that shortly. But typically, I'm trying to take in what is out there. And to me, a lot of it is fear mongering. A lot of it is misinformation because it's only one sided. So if you've been seeing stuff like, the market's crashing, it's like, well, it's not yet at a crash. And we'll talk about that today. What does it mean? What levels do we need to hit for it to be a true buy opportunity? We're simply in a pullback range. And last week we hit a small correctionary range, which is around 10%. Okay. And I'll show it once we get on the charts. So this trade war is still looming. And we know we have this tariffs back and forth between Trump and primarily Mexico and Canada. And obviously other countries are involved. So when we have these situations, if you're not privy to 2018, right, this can have a lot of volatility. So you have to remain open-minded as to which direction. You can never assume that, oh, this is the bottom, or buy this dip. We can remain here and go lower, right? So just be open-minded that I'm going to talk to my long-term investors and also my traders what's going to happen this week. There's two different mindsets that I always bring to these platforms, specifically on YouTube and on these Stock Sermon Sundays, because if you're a long-term investor, what should your mindset be, right? Is it buy this dip? And how much cash do you have on hand? How much liquidity do you have to keep buying more dips, right? So I want to talk to various different perspectives of the long-term investor. If you are a trader as well, meaning you take your day trades and you're making income, which we do inside of Leverage University, which is my Discord for my life business coaching, as well as just an overall thought leadership community where we have our trading floor as a part of that, then we trade intraday, weekly, daily, taking profits and putting it into our bank account. So that type of mindset is a little bit different because each day is different. Okay. So I'm just going to say this right now that personally, I've been leaning more towards the day trading side because of the indecision every single day, right? Because I cannot time the bottom, meaning that if I decide to enter a trade, meaning a swing trade, right, a call option back to the upside, right? I've got to be mindful that it could run for 2 or 3 days and then we could get shot right back down to where we were. So you've got to be comfortable if you're trading specifically with options and you're swinging it, meaning carrying the option contract or holding that contract for a couple of days or a week, you've got to be mindful of where it is headed. And we're going to talk about that on the charts as well. Please be mindful that you can put your questions in the chat. I will cover those specific stocks that you're looking at, and we can talk about each of those stocks together. And let me check here if my screen is still good. Oh man, we're still rolling. You still see my face. So make sure that you put your specific stocks that you want me to chart out and cover, and anything that you may want to hear from myself as a perspective on what's going on. Okay. So I do coach and talk to beginners, intermediates, and I do have advanced folks that are inside of our Discord as well. So if you're coming from all parts of and walks of life, hopefully this can pertain to you and my teaching style as well. All right. I never want to lose anybody because it's supposed to be fun, right? This isn't supposed to be stressful. This isn't supposed to be, fear mongering and concerning. We're here to make money. We're here to build wealth. We're here to, grow your portfolio. You're here to learn a new skill set, whatever you're here for. This is an exciting time. All right. So Trump admits he's willing to let Americans suffer for his trade war. We launched a drug war, not a trade war. And he even mentioned recently that I don't even know what's going on with the stock market. There was a comment of that nature. And whether we believe it or not, or whether he's playing games or not, whatever it is, he told folks before he was elected, right, that if he got elected, that he was going to immediately go into tariff mode. He was going to put the country into a quote unquote recession, suffering, force the Fed's hand to start cutting rates. All right. Very similar to 2020. If you remember in 2020, I'm going to change the screen here so we can go into some things, but I'm going to go into our Discord in a minute. But if you remember in 2020, we had a massive panic right around this time. Okay. Beginning of March, throughout the month of March into April, which was tax season. And that was an immediate panic to force the Fed to start pushing rates down. But pushing rates down does not mean that we are in a good economic state. Pushing rates down will force consumers to go back to purchasing mode, because right now, real estate deals are on a downturn, right? A lot of folks are not purchasing homes at the rate that they used to because of interest rates being at, even I don't care if it's 6, 7%. I don't care what your real estate person guru is telling you, that 6, 7%. Home prices are still at a high unless you have extreme amount of liquid cash and you're just buying up and doing HELOCs and pulling out more money and rotating money around. We're talking about the average person, okay? Because the average person is questioning whether or not to let money go into a new home, to sell their current home, so they're staying planted. So if the Fed is forced to cut rates, then that will inject more money back into the marketplace, just like 2020. But what came after those low interest rates? 2022, right? So we're still not in a good economic situation, because even if the rates start drastically coming down and go back to 2, 3, 4% for homes, people are going to be jumping at the bit to be like, oh man, let me go purchase a home. Let me go purchase a car. Let me go do this. But then inflation is still rising. So you've got to be very careful about what our economic conditions are, which is why I personally love the stock market, because whether we have a dip or a correction or not, we are going to eventually recover and have those extreme bull markets coming in 2026, 2027, 2028 into the next Bitcoin halving and the next bull run in 2029, 2020, 2030. Okay. So preparing for that as well, the next Bitcoin halving is coming up in, when was the last one? 2024. It'll be in 2028. Right. So we have to prepare at least a couple of years ahead. And right now, I'm just keeping my head on a swivel. Can I get a 1 in the chat if that is a decent summary for everybody to understand the economic conditions? Put a 2 if you're like, Brian, I don't agree with you. That's cool too, right? I'm just here to present information, right? And correct information as much as possible. And I'll admit when I don't want to go as deep on certain subjects, because you're going to have to do your own due diligence. Are we cool? Is everybody cool? Did I give a little bit of a summary? 1. Awesome, awesome, awesome. And the futures are red right now. So we are pulling back pretty heavy right now as we speak. The crypto market, we'll go into it. Let's jump into the charts where all the money. Well, actually, before we do that, Let's look at the economic data as we always do right now and the fear and greed index. So the fear and greed index is showing extreme fear still. All right. Now, I've been talking about, and let me get off of this because it typically acts up. All right. Extreme fear. Okay. Extreme fear is typically a buying signal. Right? Meaning you can buy up any dips right now. We're oversold on a lot of names. We should recover this week. Right. And we'll talk about capitulation, that word. And you're like, capita who? We'll talk about capitulation, what that looks like. And we'll talk about what the recovery on the upside looks like for my bulls out there who don't really know how to trade or invest in a continuous red market. All right. As well as what it looks like to recover and then fall right back. Okay. We can remain in extreme fear and fearful states for a little bit longer than you think. All right. If you remember 2022, right, we thought that the dip was happening in February. We thought the dip was done in March. We thought we were recovering in April into the summer. And then we continued to dip and have a true bearish year, right? A bear market for the entirety of 2022, which was 10 plus months of continuous downtrend. All right. So why am I saying this, Brian? Why in the world would you tell us that? And, now I'm looking at my portfolio and getting a little bit scared. Is because I want people not to be shocked. And for those of you that have heard me multiple times, right? Fool me once, fool me twice, right? Fool me in 2008, 2007 when I don't want to hear it. Oh man, the markets will recover. Yes, they will, but to what extent can you handle that? You have to answer that for yourself. If you bought Apple at $100 or underneath $100 and you've been holding for 10 plus years, then you're not really concerned. If you bought Tesla underneath $150 and you've been holding and keep buying the dip, you're not really concerned. It's the new investors that are coming in and they're hearing all the older investors saying, man, this market's great. I've been up. Who bought Bitcoin underneath $10,000, underneath $15,000, underneath $25,000, right? Those individuals are not really concerned because they're like, I'm still up. It's the newer investors or the people that are like, man, do I get in now, or trying to figure out how to make money? Because it feels like 2020 again when this stock market game kind of comes out of nowhere. So fool me once, cool. Fool me twice, all right, I learned. Fool me 3 times, that is on you. That is the definition of insanity. Okay. Do not get faked out again. And we're going to take this slowly on the way down. We cool? All right. Let's go into economic data. Okay. And I'll give you some levels more specifically. This is what we call our fundamental analysis. If you joined my boot camp recently, you are well equipped, right? Please let me know in my DMs or something of that nature. Hey, Brian, when's your next boot camp? I'd like to join the next one. That's cool. Right? My boot camp, I go more in depth about how to analyze the entirety of the economy so you understand the nature and the sentiment. So you're not going off emotion, right? You're not guessing every week. All right. So economic data, what we have on the docket, we have a free day, FREE. Put free in the chat if you can, a free day. If you know what that means, maybe a little bit of education here. If you took my boot camp or you've heard me before, a free day means we have no interruptions. We have no interruptions on Mondays. So whichever direction the market wants to choose, right? Typically, that is a bullish sign at the state that we are now. Why? Because there's no fear of interruptions of data that's in the way. So right now, we're in extreme dip. And we should recover on Monday, maybe going into Tuesday. But remember, I said any 10 a.m. data and 8:30 data and 8:30 data and 10 a.m. data. We've got heavy data reports this week that can choose a direction for us. So I'll give you a scenario. If we recover on Monday and you're like, man, the market's green, right? If you know, you know. If you've been following my stock sermon Sundays for really the past, I don't know how long, maybe the last 2, 3, maybe some of y'all for the last year, our read on the market has pretty much, if you've been listening and watching, it's been pretty much on point. So I'm not saying that we're going to go straight down, right? I'm saying that, okay, expect some green this week at some point. Expect some pops and some pops and some pops. And you're like, we're green. But do not get trapped. And I'll show you on the charts, all right? CPI at 8:30. We make our money beautifully at 8:30 data because we know what type of sentiment we have before the market opens. All right. For those inside of Leverage University, if you're still not in there, put Leverage down below or DM me. My Instagram is on the screen. Just DM me Leverage. I'll send you a link. But we know gaps present themselves at 8:30 data. So if we have a pop, you already know what we're going to do. If we have a drop, we're a little bit more patient to see what's going to happen. So I'd love a nice bullish pop with CPI because that's going to pop me right into our resistance levels where I'm looking to short. Okay. So jobs data, CPI, PPI, okay, for my traders. For my long-term investors, I'll give you the levels on the charts where you want to consider to buy some of your favorite stocks and where we are when we're headed back to the upside. All right. So there's our fundamental data. Let's jump into the charts where all the money is made. Okay. You can see here ES and NQ on my charts are red, what Ben was talking about. So those are the futures. Okay. What's happening after hours right now because the futures market is open. So that's already red before the entry into tomorrow when the New York session will open at 9:30 Eastern. Okay. So let's go into SPY. And I want you to look at these traps that are happening for my bulls, okay? And why I keep saying for folks to please be careful, okay? Most folks know how to just buy the upside because they believe the market's only going to go up in a period of time, which is true, okay? We were in a continuous uptrend on a weekly time frame. So let me start on a weekly. And for those that need to still learn charting, right, I do have some charting videos on here, okay? And I want you to check those out. If you still don't know, this is where the decisions and the buying areas are. All right. So the first thing we want to notice is simply that we are on a uptrend, right, on a monthly time frame from our 2023 lows in October. Okay. Now I want you to notice here what a pullback, a correction, and a crash is. Okay. If I go from the 2023 highs and then pull it to the lows, okay, that is 10%. Do you see that in that box? That is correction territory. That is where buyers are typically going to step up at that 9, 10, potentially just over 10% pullback range. Okay, so that was in a 3-month time span. They bought that correction right there and rode it for the next 2 years into all-time highs that we're at now. Okay, where we really haven't had a correction. All right. So if we look here at this pullback on a monthly time frame, that is a pullback. That is a healthy pullback around 5, roughly 6%, not in correction territory. Even if we look at this little flash crash here that we had in August of last year, okay, that is roughly correction territory, whereas that capitulation flash crash where it pushed down after hours in the morning and we hit roughly that 10% correction, as you can see there, 9.71. Okay. And right now, where are we sitting? If I pull this here from the all-time highs and pull it down, we're sitting roughly around 8.3%. Okay. So we're very, very close to that correctional territory where you see some buyers have stepped in on a short time frame. Okay. Now, the difference with this type of move here is that now we have tariffs on deck. So we didn't have really any interruptions when it was 2023. That was just a normal correction, which is August, September, October months, which are typically more bearish in nature. Okay. This was just typically that March, April timeframe where it's typically more of a month or so. But this is a little bit different. Okay. Which is why we have to be careful that this doesn't go into crash territory. So crash territory would put us at 20%, which is all the way down here on SPY. I keep dragging it, roughly around 490. Okay. That is crash territory. That is extreme buy area. So when you're thinking about your dollar cost averaging for my long-term investors, right? And I'm just talking about the ETF SPY right now, the overall S&P 500. For my long-term investors, why are people saying, hey, you cannot time the bottom and you can't think that this is the bottom? No one knows, but you have to keep your head on a swivel to understand, right, where your buy areas are going to be, which is why the charts help so much. So maybe 3 additions could be your buy areas for long-term investors. Okay. Meaning you could buy at a correction territory, which would be about 560, 565, which we kind of hit barely last year. Last week, which was 565. We touched that area of 565 last week at the bottom of that wick that we have right here. Okay. That could have been and still can be some buying opportunities for you right now. Right. You could also buy at a 15% pullback, which would be roughly around that 520 area. Okay. And then you want to load the boat or consider, depending on if you are in the stock market and you want to buy, you've got to be prepared for what is considered a crash territory, which is 490 to 500. Okay. That is how you add strategically. So you don't run out or you don't panic or you don't load the boat up here and then it keeps falling and keeps falling, keeps falling, keeps falling. You're like, dang, that wasn't the dip. So you slowly dollar cost average, right? And for those that don't want to think about it, maybe you're just a passive investor, which is what they taught us growing up. Hey, just put it on auto and keep buying $5 a day, $10 a day. You can do that. But if you want to understand truly where the correction, the crash, the pullbacks are, then you can mark these on the charts and have your limit orders or buy orders set in your brokerages. Hey, buy, I don't know, $1,000 worth of SPY at 540. Buy another $2,000 or $3,000 worth of SPY at 500. Like you can set those buy orders just in case. All right. We cool? All right. That will help you manage your long-term portfolio a little bit better, depending on where you are and where you've added, or whether your retirement account is all the way back here, you know, 2010, 2008, whatever, and you've been just holding and holding and holding. You want to add more to it, right? For my newer investors, personally, if you're just starting your long-term investing journey, right, you've got to be very careful of where you add your first add to get your portfolio started. Not financial advice, but if you know with the charts. Okay. Put a 2 in the chat if this is good thus far. Is everyone understanding? Put a 2 in the chat if this is good thus far. We good? Everybody understanding? Capitulusi. Beautiful, beautiful, beautiful. All right. So that should help all of my long-term investors understand, because long-term investors, or which everyone technically should be in some way, right? It's typically the ones that don't really look at the charts. They're like, oh, those charts are for traders and that's too confusing and that looks ridiculous, right? Type of situation. Okay. So let me do a Fibonacci retracement on this and let me look at this as well. Let me pull it from the all-time highs to those lows right there. Let me just do it to the candlestick low. Okay. Now, let me change the color of this. To white. All right. So this is how we get an analysis. Do you see here that this Fibonacci retracement is a tool that traders and long-term investors will use to see where big money buyers might reside and where the pullback levels will retrace back to if it's all-time highs. All right, let me pull it this way so we can see it a little differently. Okay. So if we had 100% retracement from the pullback of 2023, all right, that correction territory, then on a monthly chart, we have got right in this area, this 61.8%. Okay. This is what we call the golden pocket area, right in this area. Okay. So that would be roughly around a 61.8% retracement, which is where big money buyers typically like to buy up the dip. Now, ironically, guess where that is? Right where we were talking about earlier, which would be that crash territory. Okay. So that is where the load the boat wealth building type of correction would or crash would be. Very similar to a 2022 bear market or very similar to this 2020 pullback. Okay. So that is where you would want to truly watch out for, okay, I need to put my alerts on if SPY falls below, I don't know, 540, 530, just so you know that, okay, we're pulling back pretty heavy. All right. Because you may be busy. You may wake up in the morning and the news comes on and we're still falling. All right. Because we cannot miss this opportunity again. 2022, missed opportunity for a lot of folks. 2020, as everybody was fear mongering, missed opportunity. You cannot miss this opportunity again. Okay. And it would still form higher lows. Look at this. You see, every time we have a crash, that is what people are talking about as a wealth building opportunity. Does everyone see that? Let me turn it blue. Let me bold it a little bit right there. Do you see if we fall on that line that pretty much 2020, 2022, there's a pullback here, and then there's another pullback right on this line in this area, which is right around 500 or 490. And then guess what? Do you see it? All right. Cool. Now let's go into a weekly time frame. Let's pull back from the last correctionary period here, which was let's do a weekly correction, which is right here. All-time highs, and let's pull back there. So the weekly time frame gives us a more realistic that we're not going to fall all the way down to 190 in 490 in one day. If we do it all, I'm not saying we are. I'm prepared for that though. Okay. However, what if a weekly time frame pulls us back into this territory here, which is roughly around this golden pocket area, which will be 540 and into the 530s. Okay. Which would still technically be in a buy zone, tick down into there and retrace. Very similar to what we did here. We woke up in the morning right there in August and you saw this capitulation. Okay. Let me go ahead and teach you a little something. If you already know what it is, cool. The action of surrendering or ceasing or resisting an opponent. Let me do it stocks in stocks just so you can see it. A situation in which investors, traders liquidate their existing long stock position during an extended stock price decline. Okay. It's essentially an unloading of a fearful, just panic, just drop. Capitulation 2020, capitulation August of 2024. Okay. It's literally when you wake up in the morning and you see the S&P or the SPY down 15, 20 points. It's just a complete unloading. I don't trust this anymore. I don't know what this man Trump's going to do. I'm unloading. That is capitulation. That is a buy signal a lot of times where you immediately wake up in the morning, buy the dip. No thoughts, no thinking about it. It's gap down and you want to buy that. We have not had a capitulation yet where we wake up in the morning and we gap down 20 points, which was right here, 529, and you wake up in the morning and we're at 500. Okay. We have not had a true capitulation. So a true capitulation would gap us down into that 540, 550 range. And then we could buy the dip there, big green candle back up. Cool. There's your buy signal. So that's why you want to turn your alerts on to say, if I wake up in the morning and I see a 550, 540 SPY, buy something, right? Buy long dated. That would be my long call swing options where we'd have a situation like this, right? Swing, buy it, buy it, buy it. Okay. And that's where your big move back to the upside would be. Okay. But we have not had a true capitulation. This has just been a healthy pullback. But the selling pressure is very, very heavy. Okay. What do I mean by that? Is that we've had 3 continuous weeks, almost 3 months, the first quarter of a whole year, where we really haven't had a recovery like we did in 2024, which was also election year, but still, which means that we could go lower. Okay. All right. There's my buy areas for SPY. And I'll do it on QQQ as well really quickly once you understand my concept on SPY. Let's go into a daily and get rid of these. Give me a like, comment. That really helps out. Maybe screenshot it, share it on your stories, take a picture, tag me if you think this is good, if you're learning something. Okay. So now let's go into a daily on SPY and why I'm telling folks to please be careful on the upside. We have gone from this direction to now breaking a trend, and we've now changed trend. So that's why you're seeing every pop get shorted, every pop get shorted, right? So as you're trading on the upside and you're trying to guess, maybe you don't know how to trade the downside, or you don't know where the dip is. So you just keep buying and buying, which is fine, right? Switch to long-term investing and just keep buying shares, right? But please make sure you're dollar cost averaging correctly. All right. So here's some levels on our daily that I want you to take a look at. All right. The first level is, I said it last week. Do y'all remember last week when I said this right here, this move is simply a short squeeze? All that means is that on a Friday, it does not mean that bulls have, like, new money buyers have come in and just bought the dip, right? Maybe some slight things because we bought some dips, but I did tell people, hey, please be mindful. We have a lot of data, so do not go too heavy into this week. We still need to figure out which way we're going, but we can buy something, right? We're in extreme fear and we've dipped lower to my lower ends of the range. This is typically not new money buyers when you see a big squeeze like that on a Friday. Very similar to the last time we did it, which was right here and right here. That's simply the short sellers unloading their puts, unloading their short positions on a Friday. So when, just say I'm in puts or I'm in a short position, I'm shorting the market coming down. And on a Friday, I go ahead and sell all my short positions, or I go ahead and sell my puts that I've been holding for all week, right? When those short sellers begin to offload their positions, it allows buyers or the market to squeeze back up to the upside. Does everyone get that? So we're still on a downtrend, so you can't get faked out when you see these big green candles and you start to get excited, because I'm like, okay, cool. That's probably a short squeeze, but we're still showing signs of resistance. Do you see these wicks coming in right here? All right. And we're down in after hours with the futures. Okay. All right. Let's get a little bit tighter on these daily levels. Let me move this down. My green, for my new people in here or folks that are not inside of my Discord in Leverage University, right? The green area is my supports. That is where buyers are sitting. That is where, if you're trading, you want to typically consider calls. I never say just buy calls automatically. Consider calls down here or the upside, okay, or buying shares, whatever you want to do. And when you see my red, that is where some big resistance levels are. And my yellow are typically caution zones. Okay. They're kind of pivot points for me. Okay. So a pivot point for me would be 580 this week. Okay. And I'm also going to mark 570. I like 576 personally. Okay. So do you see here that we push down to this 565, push back up into 577, retraced and held this 573 area. So this 573 is holding up as support. Bounce, went to 585. Bounce, went to 584. Okay. Bounced, went to 580. So that is a lower high each time. Every time it's bouncing, it's going less in height, quote unquote. Okay. Now we got like third or fourth times a charm. Okay. So the more that this level holds, we can get a squeeze back up to fill that gap and continue back to 585 again, which is what I'm kind of expecting this week. All right. We're in extreme fear. We've pushed down into the lower end of the range and we formed a higher low. Okay. So we've shortly changed direction. Okay. So what does that mean, Brian? That means that ideally you want to think upside, okay, this week if you're trading. So my folks that love puts in my community, and I do too, I'll give you our put range or our levels where you want to consider some potential short or put opportunities. Okay, if you do like that. Okay, but ideally, I'm thinking that we are going to push up this week, maybe even tomorrow, and some levels you want to think about. First, if we break above 577.30, maybe you just want to put 578. If we get above 578, we're squeezing most likely into 584, 585. Okay. So above 578, probably squeezing into 580, and then 585 is your next level. So that's about a $5, $6, $7 move on SPY that you can trade to the upside. And also there's a gap that we need to continuously fill that we did not get filled last week. So that's how the candle would look. Okay. However, you've got to respect that this is the first resistance that sellers are going to try to protect, which is right here at 584, 585. Okay. So the next move that would happen on SPY would be something like this. It would pull back into 580, hold 580. And if we hold 580, then we can build to try to break through 585. Okay. So it would look something like this. Okay. People are trying to short, get trapped, and then it squeezes up to 590. Okay. And that's ideally how it would look to get up to that higher end of the range, which would be 590. Okay. And if you want to think about it, it looks a little bit of an inverse head and shoulders here. Okay. It's a little bit ugly, but a little bit of inverse head and shoulders. Okay. Everybody cool with that? So when you know how to analyze the market, cool. I'm expecting this. But guess what? I'm still not excited yet. You're like, Brian, what? Still more selling? You're still not excited? Yeah, because I'll go onto a higher time frame. So that is next week, or excuse me, this week. What we can expect is that we should recover back to 580, 585, and then ultimately 590. Okay. Now, let me go back to roughly around a 4-hour time frame. Okay. And I want you to take a look at this 590 area, 591. Do you see that that was the big area that we were holding for a while? That is going to be a lot of resistance. Do you see the range that we were in? There's the low, bounced, low, bounced, low, bounced, and then we continued higher. So when you break a level like that, it turns into resistance. So if we push back up into that 591, I'm going to be really careful because we could just come right down like that. Another higher low, and people are going to be like, are you kidding me? Like, no, I'm not kidding you. No, that's what happens. Join our Stock Sermon Sundays, join the university. Like, this is what happens. This is what I meant by the trap on the thumbnail. Can I get a 3 in the chat if everyone's seeing this? It's like, Brian, well, dang, when are bulls really gonna step back in? Like, when can we trust the upside again? Personally, until I get back above 600, 593 is going to be my big level. So we would need to push up through this level of 591 and then hold it for at least a weekly finish. I need to see like a weekly candle like this. Okay. Then I can take the pullback, right, and trust that we're going to continue higher like that. Does that make sense for everybody? Can you see it? So you need to see, which is why I'm saying that if you decide to trade, right, you got to have levels where you're taking profit. You got to have levels where it's heading towards. If I asked anyone, my boot camp people or my one-on-one clients or anyone that's been following me inside of our university for a while, and I said, hey, where's this stock headed? I don't know, up. That's not good enough if you're trading. You have to know where you're going to trim profits. Because if you just hold a call position, if you're trading options and you don't know where it's going, and you wake up the next day like, oh, I thought I was up. That's not good enough. You're gambling. You have to know where it's going. So what does that mean? That means if I'm in a call position on SPY, right, I need to be comfortable with, okay, where's my top end level? 584, 585. I need to be comfortable if I have enough time on my contract to trim there. Okay. If I've got more than one contract, maybe I've got three, trim two, and then keep one just in case it squeezes all the way up to 590. Right. But what if I'm in a call position, it goes up to 580, and then I keep holding and it pulls all the way back down here? That is a possibility. And some of y'all know what I'm talking about. All right. So I know folks are new, you're getting this. Maybe you're coming on here, hearing me for the first time. Maybe you're advanced, right? So if you're advanced and you know what I'm talking about, let folks know in the comments, right? You have to know if you're trading more specifically. I just talked for my long-term investors where to buy or where your buy levels would be, right? Which you're right around now, typically close to a correction territory, but be prepared to buy lower. For my traders, you have to know where it's headed level by level by level. Okay. All right. We cool? Let me check the chat. Everybody good? All right. Think we're still doing well. Please throw your comments in the chat, or, hey, Brian, I have a question about this or whatever. I'll check it again. All right. So those are your levels. Pretty clear on SPY. Okay. So where would I be comfortable really shorting or, puts on the market would be right around here. Okay. 585. And then up at 591. Okay. That's where I'd be comfortable, maybe doing another put position or short position. Okay. Well, Brian, what if we don't go up? Like, what if it doesn't push up? I got to have an open mind that what if we just keep going? Well, if we break new lows, our line in the sand is 560. Okay. If this week, next week, whenever, I don't know, if we break 560, like I said last week on a Sunday, okay, please be careful. The selling might not be done yet because you have to have both sides in this type of Trump market if you've never traded it. So if something happens overnight or whatever, and we get that capitulation, if we break below 560, is a free fall down into like 20 points. There's nothing but room. If I scroll over, I don't see any support. There's 566, which we touched last week. There's a gap. Oh man, there's a couple of gaps down to 557, 565, 555, and then this big move right here, which is nothing there. Okay, there's really no support down into like 530. You see that again? It just falls. You see that 560 right here. Look what it does when it gets below 560. Free falls down into that golden pocket zone. Is everyone feeling me now? So you have to know the levels where, oh man, I need to hold off on buying the dip because this thing could just free fall lower and then I'm chasing a falling knife. Okay. So 560, we're still good right here. It can go higher. Cool, we go higher, but I'm also still prepared for this. Or even this. Okay. If we push all the way back up into 599, you're like, Brian, you still got a bearish sentiment? I'm not I am personally not ready yet to really take it off into all-time highs unless we start holding above that 591, 590, push up into 600, and then go back to all-time highs. I'll take my confident call positions back above like 590 and then 595 or so. Okay. Because I still need to trust that we're going to get through. See that 597 rejection, 597, big rejection. So just calls options back up. Every pop is getting shorted. We cool? So if we trade calls this week, I'm going to be very careful on trimming my profits probably a little bit earlier or looking at further contracts like Fridays for, SPY, QQQ, IWM. Some of us are in some NVIDIAs already, and I'll go to those. All right. So there's SPY, and you can correlate SPY with the rest of the market. Okay. So SPY gets above 585, everything else will start moving as well back up. Okay. All right, really quick on the Qs. A little bit weaker. Obviously, tech is just taking a hit, obviously, with the tariffs. So in Q, the NASDAQ and QQQ are a little bit weaker, in my opinion, because they are significantly below 500. So you can see there clearly 500 is a very key level here that we need to kind of get back above. We need to reclaim that area of 500 and 503. Okay. So I am cool with the upside. Just know, where do you like get really confident that the upside is here? Above 500, holding above that level. Okay. And then we can take it up. If you're trading, if you're just with shares or whatever, cool. This is a dip, ride it back up. Okay. But 500, I needed to see, a daily close above there, big candle above 503, and it closed like that. Then I can use 500, 501 as a support, change this to green like that. And then I can use that and take it up to 510, 512, and then back up to 520, and then maybe back up to all-time highs. Okay. Otherwise, any push up into 499, 500, that is still resistance. Stair stepping its way down. Every pop, 520 shorted. Pop, 512 shorted. Pop, 500, 501 shorted. Pop, 496 potentially short again. Okay. All right. So let's go into a tighter time frame. Let me go into a 30. So there is a little gap that you see right there. So if you trade calls or we get a chance for calls tomorrow, right, our target's going to be 500. That is a nice move. That's a 10-point move, right? That is a 10-point move that we can continue on the way up if we break above this high. Okay, that's my pivot point. If you're marking your charts with me, 494. 494, above 494, we can trade calls back up. You see it right here, 494, pushed up into 498. So that's a nice move for calls on QQQ. Okay. If we push down, we still got support below, which would be roughly around 488, 489. Okay. So short sellers or people that are in puts or like puts will see it. Oh man, just take more puts, get trapped right back here, pushes down into there. They're like, oh man, just jump into more puts, get trapped and squeezed and ripped right back up because we still need to fill this gap. Okay. Because I know I have some folks in my live trading that will consider that. They're like, Brian, you want to jump into puts? What do you think? What do you think? I'm like, I don't like any more puts down here. I like them back up here. So if you don't like trading calls, which, I do, but I like puts better. They just move a lot quicker. They're more rapid, right? Making money when we see that big red candle, that's great, right? But you might have to take a trading day off. Don't force it if the puts aren't there, okay? So trade puts on QQQ back up closer to 500, which might take a day or so, Okay. Now, Brian, what could push this all the way up here? CPI and PPI could push us back up into these levels overnight in the morning. Right. So if CPI is decent, we could gap up into those areas. And then you already know there's going to be a big gap at open. And then I'm looking to take that gap right back down and short it with puts. Okay. If I see a big green candle pre-market on Tuesday morning, and I see a big green candle in the morning, you already know I'm gonna wake up. I just look at my phone. I'm like, up. Okay, we're up pre-market. CPI must have been decent. I know there's a gap in the morning. I'll wait for confirmation and just short with puts, easy money. If you just don't know how to do this, you need to be inside of our Discord this week. All right. Cool. So easy levels on QQQ, bottom end of the range, 488, top end of the range, 500, 501, maybe pushing up into 503. Okay. So still need to clear those top end levels. And then our next level is up here. It would look something like this, above 503, squeezing, pull back, hold 500, 501, and then we can squeeze back up higher like that. Okay. Another inverse head and shoulders kind of forming here as well. Like that. All right. So for my people that like, Brian, can you simplify this in layman's terms? Okay. If I'm not in live trading, if whatever, if I just want to try it on my own, you do what you want to do. Okay. If I see QQQ above 490, holding above 490, holding above 490, I'm probably going to look at calls. And if you want to be safe, you can look at Friday's call options, and you can look at maybe, I know it's pricey, but you can look at the 498 or 500 calls. Okay. If you want to be safe. Okay. Um, if you're comfortable trading a little bit tighter, I would look for maybe Wednesdays. So that'd be the 12th. And you can look at maybe 495, and they're still pricey. They're $400. All right. So this is unusual. I don't know why they're elevated personally. If you're more experienced like myself, and I personally think that based off trading SPY and QQQ, contracts for 1 day expirations on SPY and QQQ, they were really never $300-400. If I'm incorrect, but I don't remember them being $300-400 this close to in the money. Right. So yeah. But the top end level will be 500. Maybe could see, a squeeze maybe this March 11th if you want to day trade it. Maybe those 500s could move a little bit tomorrow. So just in case we get a squeeze. But yeah, those 500s, 498s could work on March 11th as well. SPY, I'd probably look at March 12th or for tomorrow's trading. That top end of the range for at least 2 days expirations will be, 580 would be a target. And then these 584s, 585s could be interesting as well. March 11th, see the interest over here could be that same range, which would be 580s, 583s, 584s could work. All right. Please be careful on the upside. Make sure you're trimming your profits maybe a little bit quicker than usual. Okay. Still a lot of interest on this downside. So we could retest those lows. You see 570. We could go right back down to 570 as well. Okay. So I've got that on watch too as another support range. Back down to retest 570. All right. IWM. Gotta get back above 208. Gotta get back above 208. Or you can look at calls maybe down here at 203. Okay. Calls maybe down at 203 and pull back down like that. So calls down at 203, 200 would be the best range. Take it up to 206 and then 208. If you're not comfortable watching the charts or you don't know how to watch the charts yet, I'd say if you're green and you don't know what you're doing, take your profits. If you're green and you're not in a live trading group or you're not in another group or whatever, and you don't know what you're doing and you see green 15, 20, 30%, I'd take your profits if you don't know where it's headed. Okay. Just trying to help folks out. All right. Let's jump into some notable names here. Everyone wants to know where Tesla's going. It's like, dang, where is Tesla going, man? I talked about it a little bit on my live today. So let's summarize it here for the people on YouTube. Okay. So I'm not going to erase this whole thing here. I'll just explain what it is. So again, a Fibonacci retracement on a weekly time frame. I pulled the retracement back from the top of here, our all-time highs, back to our 2024 May lows where we saw a big change in direction. Okay, so I gave it all the way down here to the low of 141 back in May, okay, where the big dip was bought. Again, a capitulation. It overnight went down to 130s and some change. People picked up that dip. Okay, now this is our golden pocket here. Okay, our 23 to 38.2%. Okay, right in that area is where buyers are going to try to hold up that area. So do you see the bottom end of the range, the balance range? You see how it consolidates in here last time? It got stuck before it broke out with the election. So the bottom end of the range is roughly like 215 to 200. Okay. And I'll show you on a daily that there's still more gap to fill. So my Tesla bulls need to chill out thinking that this potentially could be the bottom. You can pick up a 250 dip. That's fine. But there's still more gap to fill. Do you see how this gap filled right here? If you can't see it, do you see how that gap was filled? When I said, hey, please be mindful, Tesla down to 250. Y'all think 270 is a range. It'll drop $20 more. Okay. There's more gap down here, down to that 215, 212 range. And that would fill the full gap and give all the election games plus some back. Okay. Now, once that gap is filled, right, I personally think that is where we're going to get a little bit bigger recovery. But that's even concerning because if we still have that SPY dip below 560, that's still a possibility. So I've been talking about ever since we've been running up, anytime I see gaps below that have not been filled, I'm like, hey, I'm waiting on Tesla to buy it back at 150. And someone will be like, you're crazy. Tesla's at almost 500. It's never coming back to 150. Okay. We're only $100 away. Right? So understanding the charts or looking at the charts will help you gauge where your buy areas are so you never chase and your average cost is at $400. Okay? So I know there's some gaps up above. So no one knows where the bottom is, but I personally believe that 23.6%, that 215 to 200 range right there will give us a little bit bigger of a squeeze. Okay? Personally. However, what if, Brian, we don't get that and I wait all the way to 215 and, I don't get that. That's cool. Right? Then you need to reclaim back above this 50%, which would be 308. So if you get a big squeeze like that, cool. Then we're headed back up to probably the highs, and that was the dip. Do you see how timing the bottom is having multiple add positions when you're falling? Multiple add positions when you're falling. So add position number 1, 250. Okay, cool. I've got a nice little add there if I like Tesla long term. Now I've got to prepare to add to 215. But what if my 250 add just runs? Cool. I'm cool with that. But loading the boat at 250 and not knowing where the chart is or trying to time the bottom, right? If you want to get more advanced in this skill set. If you're just like buying whole, buying whole, buying whole, buying whole, buy wherever, that's a different story. You'll win regardless. That's fine. But when people want to have the best average costs, like a Warren Buffett or any long-term investor that's like, hey, I'm not buying Tesla until 80. And they're like, what? Right? So please be mindful that Tesla can simply come lower. If you're a long-term investor in Tesla, if you like, this is what I was saying earlier. If you had Tesla, back down here at 90, 100, 170, 180 average cost, right? I really like this area, like 180 again. You see how many buyers, heavy buyers were stepping up in that area right here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That area right there, 180, just tick below 200. Beautiful ad area, in my opinion. And that would be just below that 23.6%. It would tick down in there really quick. And I think that would be a beautiful ad area, right? Where you can be really comfortable that you got a big, big dip on Tesla, right? All right. So those are the levels. Now, I'm not here to fight any, because I don't know who's on these lives personally, but I'm not here to fight anybody that's this trying to say like, this is the dip, Brian, 250 is a dip. No one knows. Unless you got insider information, no one knows. If they're saying they know exactly where the Tesla dip is, I don't know what to say to that person personally. I'm just reading week to week where you have to be prepared for things when they're falling, just like 2022, 2021. Oh, this is the Tesla dip. Oh, we rebounded. This is a perfect example right here. 250 rebounded all the way to 350. And then, nope, bear market rejected all the way back down to 200. Nope, rejected all the way back down to 100. Okay. So buy the bottoms, recover, trade it back up, or buy your shares, but have better ad areas, and then you can hold it for the recovery back up. Now, one chart that's very interesting that looks very similar to Tesla, and let's go to crypto, because I know people like to have, and crypto's pulling back at Bitcoin right back to 80 where we said. Beautiful rejection, lower highs, rejection right around that underbelly, big rejection, falling down that capitulation area of 72,000. Ethereum is a beautiful chart that looks exactly like Tesla almost. Now, it didn't go as high, but do you see this double top area right here on Ethereum? I'll look at a weekly chart on Ethereum. Look how Ethereum came up, came down, came up, came down, went up to new kind of highs, not all-time highs, because people wanted it at 5,000, 6,000, 7,000, and now is retesting and giving back the whole 2024 move. Can you see that? And let me go back to Tesla. I'm just trying to make correlated because people are visual folks. Okay. Okay. Went to new all-time highs, couldn't hold them confidently, broke back down below 384, broke back down below 300, broke back down below this 270. And then last time we were underneath this 250. If we break back below 250, we fell down to 100. Same thing over here, right below this 270. We're right on that line. Okay. Look what we did very closely here in 2024 last summer. We fell below this 267, fell back down to that 184, and we still didn't fill the gap all the way back down. So what do you think that we could do if tariffs and news and things get bad? We can fall back down, fill that gap that we were supposed to fill right back before. Now we're back down to 138, 130, 115, so on and so forth. All right. Cool. Let me check chat. Y'all good? Can I get a 5 in the chat if this is good this far? Everybody cool? Hopefully my tone is more of a, oh, I understand. It's not more of a, Brian, this is going to happen. It's like, oh, I can see that as a possibility because you're showing it. That's my objective here for these lives, is for people to have a takeaway so they're not shocked and they see these headlines on social media saying, oh, well, a long-term investor that has Tesla at 100, a 250 dip is cool for them, right? But if it's a first time for someone buying Tesla or whatever they buy, a 250 dip could be like they're excited because someone told them to buy that dip, and then it pulls back to 180, and they're like, what do I do now? Do I sell my 250 dip? Like, we've all been there, right? We've all been there before. So just imagine yourself, if you're a long term, if you've been in the market for a while, you remember that first time. And that's who I want to really get across to my experienced investors or folks that's been in it. You're just trying to get more dialed. You're just trying to learn a little bit more instead of just being a passive investor. You're trying to understand, where exactly do I buy? Like, where are the big opportunities? Right? So you can be patient. Cool. Appreciate you, Trent. All right. Let's keep going. Let's go to NVIDIA. Let's go to NVIDIA. So we should have a recovery. So keep that in mind this week, that we still have some gaps to the upside. So you see Tesla even. So my Tesla target is back up to 280, and then maybe squeezing, if SPY squeezes, back up to that 390, or CPI is really good, right? We could have a move like that right back up to 300. Okay, cool. So that's possible, right? So expect that this week, potentially, that we should have a nice recovery if everything is good, and we'll break out of this downtrend like this, and we'll break back up, go to 280, go to 290, go to 300, and then now we're reassessing, what do we do up here? Do we get above 300 and we're gone, or do we reject, pull back, and then we can take it longer? Okay. So expect a recovery. That's what you should keep in mind, as regardless of what I'm talking about here. All right. NVIDIA, another big name that folks are wondering about. Same type of setup. So kind of forming a nice base right here, 110, reclaimed 110. We ticked down into 107. A lot of us inside of leverage, we bought some call options. I'm not going to give the specific one because you got to be inside to understand. So you're already up on that swing position. Okay. We've got some key data coming up on NVIDIA in a couple of weeks, another conference, so that should be good. So NVIDIA's target for me is mid 120s. Okay. So 120 is the first target, and then mid 120s, and then ultimately 130. So it would look something like this, a nice inverse head and shoulders at 110, squeeze up into that 120 like that. Okay. Maybe get a little bit of take profit, here, right back down just a little bit, start building, something like that. That's how it should look. Okay. So now everyone's excited. They're like, NVIDIA's back. NVIDIA's back. But you're a calm investor because you're like, cool, but I'm on the charts. I know which levels it's going to. So 130 is where we need to really be a little bit cautious about. Do we break through it and go higher, or do we reject and it's another lower high where people are now frustrated? You see that? So knowing the levels, 120, and then mid 120s, and then 130. Okay. As long as we hold this 110 area, would be your support area right now. All right. Now, why in the world, Brian, are you so concerned about that 130 area? Again, look at these lower highs and how much heaviness is going on around this 130. We ticked up to 141, created a lower high at 135, came down right there, started picking up steam below 130. Look how we rolled over here at 130, 131, came all the way back down to 103. All right. And now every time we get a pop and it doesn't go higher, it gets shorted. Pop, shorted even lower. Pop, shorted even lower. So that is why I'm telling folks that even if it goes higher, you have to have your head on a swivel. If you're trading more specifically, if you bought this dip for shares, great share buying opportunity. But I'm still got that 90 level in mind, and lower into, like, I wanted 100 personally. So it's still got a potentially lower end of the range that we could go lower. And you can see that that gap didn't even get filled down into that 103. And then there's that capitulation that I talked about, where it's that flash crash right down into 91, and then it rips, right? So this week should have a little recovery. 120 with first target, next target maybe 130, and maybe it goes into higher range of the range, but I've got to have an eye on that overhead resistance, and I'll tie that into where SPY is. Okay. So beautiful dip buy, should look good. But if you're trading, please be mindful of where you're holding it to. And for my long-term investors, still be prepared to buy lower. All right. I want to shout out someone from the boot camp. So if I think he's here. Shout out Lloyd. Lloyd, I like your idea, man. I like your idea that this 240 on Apple, right, is a lower high. But we got to expect it to maybe fill that gap. So I do like Apple, right, at this 240 level. But if the market gets a little strong, I want to watch what Apple does at 240. So I loved your charting, man. I think it was great. And what if you don't know what we're talking about, my one-on-one clients and anyone that joins the boot camp, we have a private chat for charting analysis. So they're charting, and then I'm actually, reviewing their charting analysis to say, hey, yes, that's right. Maybe think about this. So it's getting people better prepared for charting. All right. So 240 right there. Do you see there? 240, 240, 240. But every time we push down, we're kind of holding these lows, and it's kind of starting to change a little direction here. So please be mindful that that could, spur it a little higher. And you see that gap up above at the highs if the market gets a little strong. So I'd probably rather look at shorts up here if the market gets strong. But if that market is strong and Apple is starting to hold below 240, then it's relative weakness. Okay. The market's going up and Apple's still sitting here struggling at 240. Okay, cool. Once the market starts cooling, Apple should start coming like this and breaking that trend line. So love that analysis, Lloyd. Awesome job, man. Look out for 236 on Apple. You see here still a lot of support there. 236. So even if it pulls back to 236, that would be like that SPY 570, 560. Please be mindful that could be that rip point. Okay. And that's a trap. People think, oh man, every week, short, 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 one more time, short, squeeze the shorts one last time, traps them and they think they're, bulls step back in pretty heavily, push it up to the upside. And then the bulls think they're good. They get trapped again at the highs and then it rips it right back down. That is a Trump market. Okay. Which as you see, and I'm locked in on this. I absolutely love it. It frustrates folks and I love it. I told folks, I was like, man, I don't care what your political views are. As a trader, as someone who's willing to learn this skill set, love volatility, love 10-point SPY moves, comes back up, rips back down, comes back up, rips back down. That frustrates the hell out of a long-term investor, right? But when you learn the charts, you love that because the wider the range is, the more money that can be made, right? Also, if you don't know what you're doing, people are blowing accounts, losing money because they're holding trades and they don't know where things are going. So every day is a guess and a gamble, which is why I don't care what group you're in, it's better to trade or invest with people, right? Just from a holistic standpoint, just like a wholesome, like I care about folks. It's better to like do it with people so you don't like psychologically just get frustrated every day. You have people to talk to. You have people to, hey, where do you think Tesla's going? Like, you don't have to expose your stuff and what you got going on. Just do it with people, right? And if this community on YouTube is cool for you, awesome, right? Only good vibes here. All right. Let's do a couple others. Let me check the chat. Now it's your time. Now it's your time. What we got in the chat? Anybody got any specific stocks that they want me to take a look at and chart out? I'm pretty much basing a lot of the big names off of what SPY and QQQ are going to be doing. So if I think SPY and QQQ are reclaiming and are getting a little bit strong and are pushing up, then you want to look at any tech stock that you're trading or investing in, Apple, Tesla's, Amazon's, Google's, Microsoft's, as having a little recovery this week too. Okay. Anything in the chat for anybody? All right. Man, crypto's really pushing down. Let me see where XRP is, because XRP last time I saw was like at $2. I told people my buy zones on XRP are 180 and then back to 150 and then back to like 125. All right. So let me check on where that is, because Bitcoin's pulling back. XRP is sitting at 213 right now. So it's sitting still above that $2 range. Get back below 80 on Bitcoin, based off of this chart here. We'll see what it does at this double bottom, but gets back below 80. I think it's a free fall to 72 personally, and down into this buy area of 72 and then mid 60s. Okay. All of our analysis, if you've been following for a while, is working out literally to the T. Last week I said, cool, great, push back up into 92. If you know charts, lower high, reject, keep falling. All right. Let's do a bigger like monthly here. Like if I pull this all the way back down to these lows of 2022 on a monthly chart, right? We've got 40,000 potentially in range if stuff gets ugly. So I've got to be prepared for that as well. In this buy zone here, is it gives the whole move back, kind of like Tesla did, gives the whole move back, and we fall down into that buy zone of 35 to 40,000. Okay. But I think 72, that's at 61.8 right there percent, which is usually where buyers step up. So we should see some buyers step up here at 72,000. So wherever, whatever crypto that you are invested into or like, correlate that with Bitcoin at 70 to 72,000. Okay. Anywhere in those, because it's going to be quick. You got to turn your alerts on. Right? It might be in the middle of the night or something, but correlate whatever, if it's XRP, if it's Cardano, if it's Dogecoin, whatever. If you understand what you're doing, not financial advice, and you invest into crypto, that is a buy area for sure at Bitcoin 72,000. All right. We cool? All right. Meta. Cool. Meta. All right. Meta, psychological level here. Beautiful retest to that previous high at 600. So I loved Meta's bottom here, but I will be mindful of roughly that 650 area. So let me draw a little on a daily. Let me draw it here to the bottom of that range. That last little bull flag pullback. Let me draw it there. And it is sitting right in that zone. Let me change this to white so it's not confusing. Okay. You see, that was a beautiful pullback right into that buy area right there. So you see how it ticked down just underneath that 23.6%. Okay. If you're still confused about these fibs, that's cool. I'm just giving you an idea of how do you see and read where buyers are stepping back in, how long the wick is, right at a psychological level as well. Psychological levels, round even numbers, 600. Step back into this area here, and I'm really correlating it. I think that's a great buy zone for Meta, anywhere in the low 600s, Trent. Um, Trading area for Meta, if you're trading it, I've got it back up to like the 660s. 650 would be a target. You see that gap right back there? 650 would be a target on Meta if you're trading it. Okay, that'll be the first target. And then right back up to 680 would be the next target. So 650, then 680. Cool. At 680, I'd probably be paying a little bit of attention as to that's that 61.8. Remember, buyers and sellers like to react at 23.6, 61.8. Okay. Now I'll do a training video inside of the university, inside of our Discord, and I'll do a YouTube video about how to do these fibs as people may be confused. So if you jump on my stock sermon Sundays, you understand them. But these give you levels as to where buyers and sellers like to heavily interact. Okay, based off of different time frames. So I'm on a daily. 680 is where the big target would be. Sellers would probably interact there. That'll be a profit taking zone. Come right back down and see what we do from there. All right. And then 650. Cool. All right. Netflix filled its gap. I'll be watching Netflix back up to retest this zone. Back up to 1,000. Big squeeze there. Potentially just to retest that. So if you don't trade Netflix, I like to correlate Netflix with the market as well, because if Netflix gets strong, it has a big indication inside of SPY and also the NASDAQ. So I'll be looking at break back above 940. Okay. Break back above 940 and potentially this 930 area. So if it gets back in this zone, I'll probably look at SPY. I'm like, okay, if Netflix is moving, SPY is moving too, and everything's squeezing, I can just trade calls, look for calls back up for anything. Okay. So Netflix target back up to this 980 level. If you do like to trade Netflix, it is a big player. Contracts are very pricey, depending on your account size and whatnot. But you can see in the money $1,000, $500. There's probably some interest on these 1,000s. If I go all the way to 1,000, yeah, right here. But is it going to get to 1,000 by the end of this week? Maybe, maybe not. But a lot of interest on those 1,000 calls on Netflix. Next week, 1,000 calls. Not bad there. A little bit of interest there. Those could move. I don't like to do it that far out of the money typically, but Netflix can move $30, $40 in a couple of days, or in one day sometimes. $50 in one day. So Netflix 1,000 calls, could look at those. Not badly priced. It'll be more of a, as I call it in the community, a strategic lotto, because it's that far out of the money. But a couple weeks on Netflix could work out. 1,000 calls there, because we know we have a target back up to 990 and 1,000, and that could work out. So all right, check the chat one more time. Let's start wrapping up here. ANF and DG. ANF. Abercrombie and Fitch. Beautiful retracement here. I love this level. Why do I love the levels? Because anytime it retests a previous high rejection area, that rejection becomes support. Okay. That's typically where buyers like to step back in. Okay. Now, we called ANF a while back inside of leverage. I'm not going to go into our Discord and pull it all the way back up. Just for y'all's personal reference, going through pharmacy school and in undergrad in my early 20s, I worked in retail a lot. So I had a fashion page on my Instagram. If y'all didn't know, my personal Instagram has gone through various different stages, and I was more of a fashion page. Okay. So suits every day, every single J. Crew. I worked at J. Crew for about 4.5, 5 years. That is how I knew about ANF. Okay, so if you don't know about Abercrombie and Fitch, a lot of us were repelled by it because we thought it was for the Caucasian white male, the abs, beach body type of thing. So you didn't have the money to buy it, whatever. Okay, but now you see all types of folks up in there, all shapes and sizes. They got a different feel, different look. If you haven't, go check out Abercrombie and Fitch in your local area. You'll see what I'm talking about. How'd you know that I was going to do that? Is because I knew that Abercrombie and Fitch got J. Crew's designer. J. Crew had that look and that feel of kind of like that, I don't know, just that classic look, right? And if you don't know what I'm talking about, go look it up. So I knew that they were going to absolutely take off because J. Crew's designer had a very holistic, open mind to all shapes and sizes, women, men, colors, creeds. And they were going to change the direction of Abercrombie. And that was right in 2023 when Abercrombie started changing. So I had some of Abercrombie's first new pieces when they were coming out in 2023, some of their crop pants, things of that nature, dress pants, whatever. So this was one of the biggest retail recoveries of all time. Why do I say that? Because most people are like, Abercrombie and Fitch stock? I don't know about that. You've got to understand the nature of the market and where the shopping is and where people are spending their money when it's coming back. So is this sustainable? It's in retail. If we go into a crash and, whatever, this could, come all the way back down to 50. But to answer your question, Lloyd, it is in a buy zone for sure. It's had roughly it's probably at a Fibonacci level that, yeah, right in that golden pocket right there. So Abercrombie, nice buy opportunity. They had earnings, which I think were pretty decent. So Abercrombie could be a nice buy. It could be a decent swing position too. Maybe a short swing into the summertime because people are going to start buying for the summer. I don't care how bad stuff gets. People are going to get their fits together. They're going to get their swim trunks. They're going to get their, button down short sleeves, 3 buttons deep, whatever they want, get ready for the summer. So could be a nice little swing position back up to the 100 mark and then 120 mark for Abercrombie. So could take a look at that. So I would say buy zone for sure. Buy zone for sure. And we talked about it, Lloyd, in our boot camp as well, having 2 ad positions, and this is for everybody, having 2 ad positions for your swings. So if I'm swinging call options, I want to maybe add here as first, and I've got to be prepared to add at 70. And then cool, I'm ready to go. Given enough time, so I'm probably looking at the June contracts, maybe into September, back to school, stuff like that for retail. Get my drift? So not a bad look there. Not a bad chart at all, in my opinion, in a buy zone. That help out, Lloyd? DG. I still love Dollar General. And what do you mean by love it? Means that I like it in this area for shares and I like it for potential leaps as well. So this is in our leap territory for Dollar General. I think anywhere between $70 and $80, you can start your leap position, in my opinion. Okay. It's already starting to break out of this channel. It's looking really good. Do you see that downtrend, 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 downtrend? Up, starting to find a base at 70, and buyers are stepping back up pretty heavily, starting to build out of this level. Okay. So when I start to see that, what do you think happens? Congrats, Lloyd, on that Merc. This is almost like a Merc setup, right back to 100 plus very, very quickly, and it sneaks up on people. So keep DG for my share positions. And they've got earnings this week as well. So this could be an easy, like, potential earnings move, right? Because this is when I'm okay adding into earnings, right? Like I'm okay maybe adding a call position into earnings and then adding another one down here because it's already significantly oversold. So if they miss on earnings and it comes back down into, 60, I'm comfortable adding again. So beautiful on Dollar General. I'm about to put that inside of our Discord with all of the levels on that. But I think that is a beautiful ad position this week on Dollar General for potential leaps and shares, depending on who you are. All right. So I'd look into January, probably go into the 120s, maybe 130s for January 2026. If you want to do more in the money, you're more than welcome. If you want to do it closer, maybe the 100s for June, those could work out as well. But yeah, it's good. I'll be calling that out in the Discord a little bit more, confirming this week. But it's almost look exactly like our Merc position and our CVS position. There's CVS. What happened last time? It went back right into that golden pocket. CVS is building right back up into these highs. Merck called that out in our community. Congrats to those who took Merck right down at those lows, bought it at 80. Now it's almost back at 100. Okay. Awesome. Anybody else? Yeah, I love that. Anybody else? Maybe it's not like a specific stock. Maybe it's something that you want to understand really quick that I can go over while I'm here live. All of the semiconductors should be on watch this week. AMD, SOXL, Palantir with that 80 hold. Okay, Palantir, do you see right here? Beautiful hold right there, right around 80 with gaps above. Palantir breaks above 90. It's going to start squeezing. So almost like a triple bottom. 1, 2, 3. Maybe squeezing back up into that 100 on Palantir. So anything dealing with chips, AI, semiconductors, I think it's a nice call option potential this week. Even share buying, just be mindful that we can come lower, but this week could be that recovery week that we get before we get a little bit more clarity with Trump and where he's going. But I like the setups. We just need some breaks and some holds. So Palantir, Dollar General, the video be a main watch. Still, buying some AMDL shares. It's down here into these lows. Do you see AMD again? Right there. A lot of action. And the last time it got to around 94, 93, it ticked down into 95 last week. So if you can get that level again, maybe another pullback into the low 90s, I think it's a good buy personally. But got to be patient on AMD. Just got to be patient. AMD looks very similar to Tesla, how it could potentially look, right? So AMD was everyone's favorite going all the way up to 227. It was going to take off. Do you see that big sell candle right there? And it pulls all the way back, giving the whole move pretty much of 2023 back. Or excuse me, all of 2024 back. All right, and a little bit of 2023. So that's what I'm saying is correlating different charts with the possibility of what could happen with Tesla pulling all the way back down to these lows at 180 again. All right. It can happen. Do not draw it out of the question. Every day is a new day. All right. IBM, big bullish candle here. Just kind of talking out some things. I'm pretty much done. But IBM, big bullish candle here. I think they had some news. So, but I want this gap fill on IBM. I missed the gap fill on Netflix. So I'll be watching this gap fill on IBM. If it rejects again at 260, but with this much bullishness, and if we get any more strength, it could break into new all-time highs. So I want to kind of just watch it. But if we get any type of rejection up here in this area, I want to kind of see if this is more of a trap. And we come right back down. So kind of just a big short squeeze. How much these contracts moved last week? 1,000%, 600%, 1,000%, 900%. Went from 245 to 260 in a matter of like an hour or so. All right. That's all I really got. I think McDonald's went crazy too. Yeah, broken a new all-time highs for McDonald's. That's getting a little bit overdone, overcooked. But I'm really careful on shorting McDonald's every time I try it. So, but that's a little overcooked. Anything the DIA is just running, the Dow Jones. So, nothing. Everyone hit the algorithm button on great content. Appreciate you, man. Appreciate you. Thank you so much. AMD, I think I covered it, but just go over it one more time, Trent, because I didn't see your comment, and then I'll get up out of here. This is your last chance for anybody. Any final questions, thoughts, perspectives? Um, if you could, just screenshot, maybe take a picture, tag it on your stories, tag myself at Dr. McElderry, or just give me a like. Share it with somebody that you know. All right. AMD, you see it's still in this downtrend. I didn't go too much in depth, but where AMD needs to really break back above to confirm would be back above these moving averages here, which would probably be back above 115, which is where you would see AMD just start squeezing, right? Back above 115 would be a squeeze, but I like it here. It's kind of forming a little bit of a hammer candle on a daily. See that candle right there? Kind of a hammer candle on a daily right there. So at least back to like 106, 107, and then back to 114, 115. So AMD is going to move very similarly in correlation with NVIDIA and that conference is coming up that we talked about in the community. So AMD could easily be back up into the 120s. So I think it's can't never time the bottom, but I think AMD, NVIDIA, any semiconductor this week should get some action. Any semiconductor this week should get some action. AVGO, see it right on that moving average there. Another semiconductor looking really good, which it had good earnings too. AVGO had good earnings. We took that gap fill short, and it should recover back to 200. Above 200, it should move another 10 to 15 points. So every semiconductor should be looking pretty decent for a nice recovery this week. All right, TSM sitting right on that moving average there. So semiconductors, heavy watch this week. SMCI sitting right on that moving average there. So right in that buy zone, right previous high, right there. You see it. Previous high at 35, sitting right on it on 35. All right. So should get a nice recovery back to 45 and then back to potentially 50 right there. Ionic, another one kind of right in this buy zone here. We called out Ionic in the community right around this breakout of $6 to $7. Shout out to Ashton, my girlfriend. She brought up Ionic because she is a nerd with quantum computing. So just I always give her the credit for that because I made a video on Ionic back in February of last year. You can go rewatch that where we saw Ionic down here at $7. Now it's pulled back to 20 to the buy zone, back at the moving averages, and that should be another potential buy recovery as well. Every semiconductor looks good. Every semiconductor, as long as CPI and PPI don't mess it up, but every semiconductor looks pretty good. Let me look at SOXL, and this gives you a chance for anybody with their last questions. SOXL looks really good as well, right on that trend line. If you don't know what SOXL is, it is the leveraged version. And do be careful with leveraged versions of a lot of the ETFs. It moves 2 times, but I don't mind leveraged versions if you know what you're doing. Okay. Or you're in a community and whatnot. I like buying leveraged versions when they're super oversold, which it is starting to approach that level on a daily, and super oversold on a 4-hour time frame. So 4-hour daily getting very close. And with the semiconductor sector recovering this week, leading up into that NVIDIA conference, should get SOXL back up into close to 30. Okay. So, all right. Now, as all the semiconductors push up into that NVIDIA event, please be mindful that buy the rumor, sell the news. Buy the rumor, sell the news. It could be a sell the news event. All right. Cool. All right. Awesome. I think that's it. That is it for my summary. Hopefully you learned something today, got your levels, got a sentiment, got a good feel on the market. You should feel an energy within the market and what to do. If you're live trading or inside of my community, I'll be putting the watch list up tonight, some levels, and then I'll see y'all in the morning. But here is our Discord, as you can see, just for somebody who is not inside. Some of you have access to certain channels and you don't have access to our full trading floor. It is detailed like no other. Okay. So our swing trades, I put active, closed, check mark. If it's green, we've had a lot of success with our swing trades. We're in an active NVIDIA right there. Day trade signals with charts, everything that my idea. Congrats to anybody that took that Tesla, played out beautifully. There's it before and there's it afterwards right there, down to that VWAP moving average. Shares and leaps, we have a full channel in there. It's organized by threads. Okay, so I update on some shares. And for anyone that's inside of our community, inside of our Discord, please be mindful before you enter anything. If you're inside of the community already, you're inside of our, university level, please ask. Okay, that is what this is here for. So I know people, when I post things, it means that I'm formulating the idea. Okay, so I'm typically trying to put it in the ideas section. Okay, and then if I'm in something or looking to enter something, I will say, hey, I'm in my first position. Okay. Now you don't have to take what I'm in, but if you start learning how to do this, you will value the fact that I'm doing a lot of the research for a lot of folks. As you can see, I can chart very quickly. I've traded everything on my watch list over here all the way up and down. So I have a really good feeling about pretty much where everything is. So, all right. Let's shout some folks out from our wins channel. Shout out to Dennis in our community, really big active community member, been in here for almost 3-4 years to this point. Shout out to him for winning on the Starbucks trade in our swing trades channel. Okay, so signal to Starbucks right here for a short position. Okay, this was on the 26th of February. You can see how the chart looked before. I saw a signal of a break of a trend right at 115. And then I want you to look at what the chart looked like afterwards. You see that? So he was in a put position all the way down to roughly 105. That was a roughly almost $20 move for puts. Easy money there. Congrats to Dennis for taking that, or anyone else that took it. Congrats to Lloyd again for taking this Merck trade. Here's how it looked before. There's the chart. Can't deny it. Marked it out right at 80. There's the green all the way up. There's my trade idea all the way back up through that gap fill. Okay. And there's how it looks now, right up to that gap fill right at 98. Okay. So shout out to anybody who took our day trades. Shout out to Dreama. Okay. Dreama's been in here for a week, fairly new to the options trading games, been winning, been getting the ideas. Shout out to those that joined our boot camp last week. Amazing time there. Shalita, who joined us back again, Megan, who joined, Dreama, Lloyd. Shout out to Trent, who recently just joined us inside of our university as well. Then took a couple of red trades. I know we don't just take green trades. I do just show my losses as well. Okay, so I do protect my gains, but I do take some losses, as you can see there. But then getting back the wins and staying green for the week. So pretty big, nice day there on Friday, and we're just shouting out our wins. So shout out to everybody inside. There's Ben, Dennis, Dreama, Trent, anybody else that is inside of my community. If I miss your name, shout out to you as well. Even if you're not able to join live trading or you're not in our community and you've been getting value, please let me know. Shoot me a DM. Say, hey, Brian, I know I'm not in the university or not in the community yet, but I get value from the YouTube channel. I'd love to hear that. So all that being said, I'm finally tuning out, and I will see you all this week. Thank you so much for joining in, giving me of your Sunday with your family, your kids. If anyone's around you learning this too, I try to make it like a third grade level, so it makes it fun. It's always cool to see my folks that are teaching their kids, or they're like on the charts with their kids. We have all kind of crazy stories. So love y'all. Thank you so much. Until next time, I'll see you the next